you time count? Will you? Just let me know when it's 20 minutes. Okay, I'll tell you. Right. Ladies, gentlemen, good afternoon. Welcome to the launch of Majid Al Futtaim's Economic Integration Barometer for the Middle East, North Africa and Pakistan. It seems to me that the World Economic Forum in Davos is an entirely appropriate venue for this event because it talks to many of the ideas and concepts that the WEF has made its own over the years. Globalization and regionalization, free trade, free movement of capital, people and data, energy and energy transition. All those concepts are within this barometer. But it's not unremitting good news because in a nutshell, it seems to me that the Middle East, this region we're talking about, MENAP, has fallen short to some degree as a regional economic powerhouse vis-à-vis the global economy. Because the barometer that we are going to discuss today, which is being launched today, shows that interregional trade, i.e. trade between the individual states that make up the region, comprises only 2.9% of regional GDP, compared to a global average of 7.9%, and as high as 22% across the European Union and other parts of the European trade zone. So put that another way, 8.5% of the world's population in the Middle East only produces 3.4% of global GDP. There is a shortfall. The region excels in other aspects of global trade, exporting 34% of its GDP to other parts of the world, compared with the global average of 25.5%, but there are special reasons for that, which we will talk about. So this barometer, launched today, is an instrument to understand that phenomenon and to tackle the challenges that it presents and to make the best use of the opportunities that it presents for the MENAP region. So I am looking forward to an insightful and entertaining panel today with four of the best known names of global and regional business. Let me introduce them. From my left, Ahmed Ismail, Chief Executive Officer at Majid Al Futtaim Holding. Next to him, Sven Smith, Chairman and Director at McKinsey Global. After him, Hatem Dawidar, CEO of what I'm told I must call E&, the company formerly known as Etisalat. And beside him on the far left, Majid Jafar, CEO of Crescent Petroleum. Welcome all of you. So let me first of all ask Ahmed Ismail from Majid Al Futtaim. This has been a Majid Al Futtaim project from the beginning. Ahmed has been deeply involved in it, I know. So let me ask him to tell us about the barometer, why MAF has launched it, and what it aims to do. So let me hand over to you, Ahmed.
Thank you, Frank. I think you mentioned it in your opening remarks that the region punches well below its weight. 500 million of the 8 billion people on this planet live in our part of the world, but on average, they produce half what the average global citizen does. So we see, based on pure math, a $2.5 trillion GDP opportunity just by the MENAP region catching up with global averages. I mean, 2.5 trillion sounds like a lot of money, and it's perhaps difficult to visualize. So one way to visualize the opportunity is to imagine what life could be 20 years from now. And instead of us congregating here in the ICE village, 50 people or so who are interested, affiliated with the MENAP region, we're actually in Davos, but on the main stage across the road. And it's not 50 or 60 people, it's an audience of 5,000 or 6,000 people. And instead of us debating, the challenges and the opportunity and potential, we're actually reflecting back on a great transformation journey for the region and looking ahead to the future. In this world, GDP per capita would be around $20,000. That's 4 times what it is today. And you can imagine what this would do to the citizens of all of our countries and all of our communities. Actually 10 times for a market like Egypt, perhaps 15 times for Pakistan. And for those of us who run businesses in Egypt and Pakistan, this means that our businesses could be 10 to 15 times larger just by catching up to the global average. FDI would be 50% of GDP, which could be quite transformational for all of us. Could be quite transformational, especially in terms of job creation, because at that level of FDI, unemployment would fall to 4%. And we would have certainly a lot more social cohesion in many of the markets in the MENAP region. In fact, while today we only have 4 unicorns out of the region, we could have up to 8 decacorns. By the way, India has 100 unicorns. And for many of us running regional businesses, today the region only has 1 business in the S&P 500. If we catch up to the global average, we'd have 10 businesses, many of whom could be in this room who are S&P 500 companies. So the size of the prize is quite significant. So the barometer is an attempt to really establish a baseline of where we are today versus our potential. And I'm talking here potential just catching up to the global average, not the potential in terms of how can we overperform. And in doing so, we consistently every year show progress. It becomes a call for action for private sector to come together and think about initiatives that the private sector can adopt and drive to drive integration around free movement of goods, free movement of people, capital, intellectual property, all measures that I think as Sven would outline, were clearly underperforming. So from a Majid Al Futtaim perspective, this is not just great for the region, it's also great for our business. We estimate if we were operating in MENAP and MENAP had caught up to the global average, our business would be 2 to 3 times the size it is today. So it's also a great opportunity for the private sector to see not just good for the region in terms of employment, social cohesion, investments, education, etc. It is also good for business because it will allow all of our businesses out of MENAP really to scale up to our full potential.
In a sort of broad historical sweep, why has this come about? Why, compared to big trading blocs like the USA, Europe, ASEAN, I guess, in Southeast Asia, why has the Middle East lagged so far behind?
I mean, there are multiple narratives about why. I think what we're more concerned about is the path forward. And the path forward for us is for the private sector not to, in a way, delegate its responsibility to the private or to governments, essentially, but they take on a leading role. But we're seeing good signs of progress. The Public Investment Fund of Saudi Arabia has established an investment platform in Egypt. We've seen the tri-party industrial investment program between the UAE, Jordan, and Egypt. So there are signs along the way, but these are mostly government-sponsored initiatives. I think it's about time that the private sector takes a more bolder role in driving that agenda. Okay,
but of course a lot of that is the private sector lobbying governments to put in place the right framework of regulations, legislation, to enable these freedoms, freer trade, labor.
True. I mean, part of it is lobbying, but I think the bigger part of it is actually taking action. I think it has to be a couple of decades of concerted action by the private sector in terms of investing in human capital, investing in technology, and engaging with the government to make sure that the right frameworks are in place. But it's not just a matter of lobbying. I think it goes well beyond that, as the barometer clearly articulates.
Right. One final question to you, Ahmed, in this little section. I noted that the region does actually export, more of its a bigger proportion of its GDP globally than most of the rest of the world. So this comes down to what? To energy, to oil?
Yeah, that's the hydrocarbon endowment.
Yeah.
Absolutely.
Okay. So that is one reason, I guess.
I think that is the key reason, because on intellectual property, for instance, we generate only 1.5% of the intellectual property used in the region. We import the vast majority of intellectual property.
Right.
But there's also, I think, another thing where private sector could play a big role, and an immediate role, is to try to reverse the brain drain. We've had 15 million citizens of our part of the world, migrate, 50% of professionals within that 15 million leave the region.
The brain drain, yeah, yeah.
So that's an immediate, I would say, avenue for private sector in all industries to find opportunities to create jobs, to bring back that talent and make sure that that talent stays rather than creates value.
Okay, we will dig deep into the education aspects of this a bit later. But thanks, Ahmed. Let me move to Sven, because McKinsey were involved in this from the very beginning too, in the methodology, the nuts and bolts of this. Describe your approach in this thing to us, please, and what more is there to go?
I think this is a fine moment to do this, because this is probably the WEF that talks the most about not being global, but being regional. So this might actually be a moment. And I think for the region, this is also a moment, because there's a lot of, let's call it what it is, there's a lot of oil in the machine right now with good prices. And when there's oil in the machine, that's the moment that you can make things happen. I was in a similar session in Europe with European leaders talking about Europe and its problems and opportunities. And even in Europe, people think we should have more of a single market than we have today, which approximates more what the US has. Let me give you a very simple example what still not works in Europe. If you are a startup in banking, and we can talk about telecom later, but if you are a startup in banking and you write code for one country and you think I can take it to the next country, we actually have a unified numbering system, you actually have to rewrite the code, which means it's very unattractive for a startup to be in the fintech world in Europe still. And it's just a little example, which I'm sure is also not yet organized. I know it's not yet organized in MENAP. Another example is if you're a beer producer and you basically, let me name one, which is from my country, that has at least one brand, Heineken, which is totally unified globally. When you go to one country, you have to have a different label than you have on the other, which is costly, cumbersome, and so on. So even Europe is still on the road of bringing things together, for which is US, of course, is much further. And single countries are. We do a lot of import-export. My country is 60% in and out. It's a small country, but that's the benefit of Europe. One other miracle of Europe has been in the 4 principles, which are the ones that we're measuring also for MENAP, is that when Eastern Europe joined, in a way you saw a big experiment of a large bit joining a single market. And this was an enormous wealth creation for Europe, because we got a lot of workers that could help on the work where we were short workers in Western Europe. But it also was a massive economic opportunity for Eastern Europe, and it did actually what you described for MENAP. It 4- or 5-folded GDP per capita by just bringing it together. And so why are we suggesting that the barometer might be a help? The help is, this is a proud region, and in a proud region, what you measure might just get done a little bit. Everything, I know you work when you see Saudi doing something, then the Gulf follows and the other way around. You kind of like to move the needle up. And if we set the baseline, as Ahmed was saying, at where it is now, which is a 10x opportunity on most dimensions versus where Europe or the US is right now, just by looking at it, I can just see people starting to look at it and say, well, this thing would be better if it goes up. So what are these things? Clearly, it's trade in goods and services. It's IP, as you mentioned. It's capital. And let's not forget people. That Eastern European example is people. Right. And people is as important in this whole thing. Because, and by the way, the other thing I want to say, which is the lesson from Europe, you cannot do one by one. Because if we had done Eastern Europe without freedom of movement of people, Western Europe would have wiped out the industry of Eastern Europe and the people would be unemployed. What actually happened is, yes, there was a disruption in Eastern European industry, but the people moved and had jobs and that equalized. So it's very important that these 4 things happen at the same time. And so you open up in the same way. That's the lesson, I think, that you see in the US in the extreme. And on almost every of these 4 metrics, trade, it's a 10 times. IP, it's a 20 times. People, it's a 20 times, and so on. And that opportunity exists. I will say there's one thing to your question, like the exports are high, and yes, it's the hydrocarbon endowment. I do think in this transition to this super high level that you described, Ahmed, this region will need to be more of a maker. Because the stuff that moves around, a big chunk of it is trade. And if what you do is you sell the oil and you buy the stuff from outside the region, and nobody is making it in the region, then there is nothing to export. So part of that journey will be to be more of a maker of services, maker of goods, which I think is also very natural from a circularity perspective and so on, that it doesn't travel all the world. But I think if there's one bottleneck I would want to call out to reach the barometer is there has to be a different set of industries active in the region that can export to each other. And of course, that doesn't need to be all industries, but some industries will be better off in this region than they are in other regions because you have a natural endowment that you could use for that. And I think, you've done it in airlines, you've done it in other places, and you will do more airlines, I'm sure. And all of that will lead to both more international trade and local trade for this region. So I think the potential that Ahmed described is totally there. Don't take it lightly, but I hope that this barometer does something by setting a baseline, that a proud region just says, we're now going to beat that baseline.
Right. The region that you describe, or that Majid Al Futtaim has chosen, is very varied, isn't it? Very diverse. Going from all the way from North Africa to Pakistan. Were there any problems in terms of the methodology, compiling the data there, Sven? How difficult was that? And are there any gaps that you need to fill in?
So there's a chart in the report that shows that data availability is not yet at the level that you would find in the US and Europe. But for each of the barometer levels, there are some good data already that are quite comparable. There's some ideal metrics that you also would want to have that the full data don't exist yet in all countries. But again, we thought, let's not show that. Let's just pick the metrics that we have, or let's show also what's not yet there. And as a result, I am fairly sure if a government looks at it and says, we don't have that data, that's a bit strange. So next time, maybe they will have the data.
Right, the governments will have it, yeah. They'll have to have it if they want to take part. Of the four, trade, intangibles, capital, and people, which is the most integrated in your view already?
Maybe people.
Really?
But I don't think in real flows, but in collaboration. If you take Majid Al Futtaim, it's in a way a backbone for working together. That stuff, co-ownership of businesses, is a little bit more happening, and through that there's some IP transfer through the people collaborating. I don't think it's yet people migrating. Of course, this region has, in particular also in the UAE, has gotten a lot of people coming in, and that has worked. I think the transnational is not yet at the same level that you would see in the US and Europe. But I think the collaboration, I start to see more. But all the levels are like at the handful of percentages yet. Well, they could be 20 or 30 or 40.
Right. Let me move to Hassan Dawadar, CEO of EAND, which is, of course, one of the biggest corporations in this region. Give me an overview, please, Hatem, of how you see this issue, this challenge, and in particular, if you could talk about data, because you deal in data, don't you? How can you go exchanging data with other countries in the region and helping to integrate, telecom services there?
Okay, so let me first start by emphasizing that there is some flow between countries in the region. And I think a good example of that in telecom, that you see investments in the region coming from other parts of the region. So you see a lot of outflow of capital from the UAE and Saudi into the rest of the region. So there is in telecom and technology, but also in other areas as well. So there is already some movement, maybe not enough and maybe not in all sectors yet, but there is some movement. The other thing is, today, there's still a very big disparity in the region. So while we look at markets like the UAE and Saudi as developed markets, quite advanced, in fact, in many cases, you see the infrastructure is far superior to what you would find in many countries in Europe in terms of networks, stability, speeds, coverage while you still have, and technologies. So for example, in the UAE, we have 5G almost everywhere. In Saudi, also in all the big cities are fully 5G covered, while you don't find 5G as a technology existing in some other countries in the region at all yet, like Egypt and Pakistan and so on. And of course, you can come to a lot of things about the cost of devices and so on that are still high and is a barrier to get the people to use it. But what we have seen in the region as well is a lot of intangible exports, which is offshoring. So today, we offshore call center activities from the UAE to Egypt and to Pakistan. We offshore IT development as well. So if we can do more of that in the region, this is also becoming, in the information age, is becoming another major export and a major trade movement, and also creates massive employment, because you can employ a lot of people, whether it's business process outsourcing or IT outsourcing. You can create a lot of jobs that start creating, again, improvement in living standard and over affluency over time. So this is there. I think from an information point of view, and information still has information sovereignty, even within Europe, within the EU, you have information sovereignty within the different countries. So there are rules and different regulations in different countries. So information by default normally stays in the country. But again, with the proper regulation, with the proper dialogue, there could be an agreed set of information that can be exchanged. But until that is done, information is still a very sovereign thing and stays
is a proprietary thing for the country.
It's a proprietary thing for the country. And this is even within the EU. There are certain types of information that cannot move within the EU. So it stays within, and the EU is, I think, a great example of a fully integrated economy, like Sven has said, yet there is data sovereignty over some areas of industry, including telecom, because of course, in that type of business, you have a lot of data. But on the other side, data movement in terms of connectivity in the region is growing, and there are lots of investments in it. So the amount of cables that are starting to run now, coming from India all around the GCC and then into Africa and North Africa, is growing by the day. There are new cables all the time, new fiber, which enhances the connectivity. And this, of course, builds back to the availability of these offshoring and outsourcing, because the base for being able to do these things is having incredible amount of bandwidth where you can offer seamless service, that when you ring your customer care in Saudi or in the UAE and you're answered in Egypt, or if you're speaking Urdu, you're answered in Pakistan, the customer doesn't feel there's even the bit of lag or there's even the little bit of deterioration of quality. And of course, the information is still kept in the UAE, so it's all cloud information. So the customer care agent has to be able to get this information very fast to serve the customer. So from that sense, I think there is growth in the bandwidth and the connectivity of information of the countries, but of course, there is room for a lot more.
Okay. Majid Jaffer, I know that one of your fascinations is with education, training. So I will ask you a bit later, if you don't mind, about the brain drain and what can be done to mitigate that, perhaps. But of course, Crescent is a big energy company, and we have spoken about how energy, in some ways, is at the heart of this, the disparity between intra-regional and global exports. Just give us your thoughts on the energy aspects, would you please?
So clearly, can you hear me all right? Clearly, the region is a big energy resource holder. We have about half the world's oil and gas reserves, roughly. We're still only a third of world's oil production and a sixth of the world's gas production. So actually, even in that space, we're punching below our weight. But it is a huge percentage of export revenues and government revenues in many countries. We are currently going through a boom because of the energy crisis last year and the price spike. So the IMF estimates just the next 4 years will see an extra $1.3 trillion over what had been budgeted for in the major oil exporters, most of which are in the Gulf. So it does obviously crowd out other sectors in terms of competitiveness, and that effect has been seen even in countries like the UK, demanufacturing after the North Sea discovery in the 70s. It also begs the question, can we really compete in manufacturing of products when we have skills productivity that's low by global average, and our costs is not going to compete with some other low-cost producers. However, we've heard on services, FDI, we do have clearly a lot of capital in the region. I've just pointed to the most immediate figure. And we do also have in the region huge needs of capital investment. In countries such as Egypt, North Africa, Jordan, and others, massive infrastructure needs. So is there a way, I mean, in terms of integration, it could be trade in goods, and there does need to be more stuff made in the region, but I think it's a tall order by global competitive standards. But more investment, I think, was starting to happen. It always gets interrupted by political issues or conflicts. The potential there is massive, and the potential for returns, both economic and social, are equally massive.
Right. So you are thinking investment from the capital-rich countries, principally the oil exporters, into the other parts of the region, which are oil importers?
Yeah, so the IMF divides the region. I think it's fairly useful. As you mentioned, the countries are hugely diverse from Morocco all the way to Pakistan. But roughly speaking, they say they are the oil exporters with savings, which is pretty much the Gulf and the Big Four. There are the oil exporters without savings, which is like Iraq and Algeria and Yemen and Libya and others who have exports. Egypt also to an extent, but still have, but are economically more fragile, let's say. And then the oil importers, who are in particularly a sensitive, fragile time at the moment, because we've got global inflation, interest rate rises, they've got debt servicing, and we've seen currency falls from Lebanon to Egypt. So real stress is there. Can there be, and I pose this question, as I posed it 10 years ago, along with others here and in the World Economic Forum in the MENA region, can there be some sort of multilateral structure? I suggested an Arab stabilization plan that, with perhaps Western institutional support, creates the investment potential for this capital in the region into these well thought out, with economic return infrastructure projects that the region so needs to improve its productivity and its employment. I'm not saying we should only invest in the region, and the sovereign wealth funds have been written about. They've become more sophisticated, their global investments have been incredible, but if more can be done within the MENA region, the returns should be high, both economically and socially.
Okay. Majid, let me stay with you, because I want to get your thoughts on the educational aspects of this and the brain drain that we've mentioned a couple of times now. What can be done to halt this exodus, which by the figures is quite startling, isn't it? A lot of people from the region end up emigrating and taking their talents elsewhere, which works against inter-regional integration. What can be done to halt that or to slow that?
So I think, there are two causes. You've got your acute crises, like Lebanon financial collapse, where so many talented young Lebanese left. Luckily, thanks to places like Dubai, they didn't all leave the region, but they left Lebanon, but some did leave the region. And the ones that stay in the region have the chance to maybe go back one day and help rebuild their country. The ones that go to the US or Europe, very unlikely to bring them back. That's a real, perhaps permanent loss. And obviously, enhancing financial stability, whether it's the IMF or others, is critical to try and prevent or stem the worst effects of those. But then you have the chronic issue of youth unemployment. We have the highest youth unemployment in the world. We've got 100 million people between 15 and 24 years old. More than half our population are young. It should be, for Europe, they'd love to have that. I mean, it's an aging population. It's a problem demographically in Asia. For us, it's seen as a problem. It should be an opportunity, how to create the jobs for those young people, it's got to be private sector led. The states can't, the public sector can't absorb all of them. That's become clear. Part of the problem is the skills. They don't have the skills from the public education system that the job market, the modern job market needs. We as Crescent, we partnered with the IDRAC platform of the Queen Rania Foundation and the British Council to create, during the COVID pandemic and before, an online platform, online courses for enhancing employability. English language skills, basic IT skills, workplace skills, like how to write a CV, do an interview, or work in a team, in an office, and 350,000 people in the region signed up to those courses. That's just us trying to do our little bit, but it's the kind of thing that's needed to ensure that this generation isn't lost, because the more gradual but also significant drain happens for that reason.
Thank you. Are there any questions here? I said that I would throw it open at some stage, but we can carry on. Yes, please. There is somebody here who wants to. We will go back to the panel again.
Hi, I'm Majid Al Futtaim from Hikma Pharmaceuticals. One of the issues that you mentioned was the expenditure of GDP was around 2.4 from the global economy. I was taking it in perspective also for the pharma or healthcare. We spend in the Arab world 2.4% on healthcare. Sorry, the Arab world is 2.4% of the global dollar value in pharma, while countries like Japan is 20%, the US is 42%. Although the population in the Arab world is much higher than Japan, and although the population in the Arab world collectively is higher than the US. So the expenditure on healthcare for the individual in the Arab world is very low. If you go to education, it's the same, like you said, Majid. If you go to even basic food industry, the spend on food, the healthcare industry is very low. So one of my suggestions will be, if you want to measure the economic integration barometer, it should be how much does the citizen in the Arab world receive in healthcare versus the global community, how much they receive in food subsidy or food intake, and on education, because these are three pillars for the future. And if we're only going to talk about industry of oil or communication or technology and disregard the basic human functions in the Arab world, there will be a disparity. So the numbers will be not properly presented. This will be my suggestion for you.
Okay.
Well, thank you very much for that. I mean, obviously the barometer is going to be a live instrument that's going to change and evolve over time. And this is precisely the type of input we need in order to make sure that this barometer is real, understood, and is a catalyst for action. To build on what you said, and demographics, link it back to Majid's sort of point on demographics, we need to look at our demographic situation as potentially a future dividend that we need to invest in today to make sure that we get that dividend. And specifically when it comes to manufacturing, it was published, I think, last week that China has reached peak population, which means that the world's factory, being China, is going to reach peak workforce very soon, because once you peak in terms of population, the workforce peaks very soon. This is going to lead to significant dislocation in terms of manufacturing capacity and supply chains over the coming 2 decades. The question then becomes, given that we're sitting on potentially a big demographic dividend, how do we marry that with the opportunity that's happening around us in the world? The other point or the other case study is from the airline industry. I mean, we're all very proud that MENAP is home to some of the best airlines in the world. And many of us, if not all, have come to Davos through Dubai, Abu Dhabi, Doha, etc. But despite having some of the best airlines in the world and the most profitable airlines in the world, there is no direct flight between the city of COP27, Sharm el-Sheikh, and COP28 Abu Dhabi. There is no direct scheduled flight. So I would hope in 20 years' time, again, back to this sort of view of what life could look like in 20 years, when it's our turn in the region to host again, it will be what, COP 47 and COP48,
Something like that.
that wherever we host it in the region, there will be a direct daily scheduled flight between these two cities.
You can go from Sharjah to Sharm el-Sheikh, by the way. Don't forget Sharjah.
So that's Sharjah COP47, that is.
COP47, lovely thoughts. Sven, the idea that this is work in progress, isn't it? We are making progress on this barometer, but of course a barometer measures pressure, doesn't it? Do you feel under pressure to accelerate this, at a much faster rate, or are you going as fast as you can?
I think this is a start, and I think it's a living thing. I think what will be needed next to the barometer, which just says here's the baseline, is what is the narrative for this region, which is very diverse, across investment themes, across actually whether there will be making or not. I will argue that the argument that you made, which is totally right, that this starts with jobs, because a region is not inclusive to society if people are not empowered to have a job, to be part of education, be part of healthcare, be part of at least affordable housing and all that kind of stuff. And since the variance is actually quite high, some of that foreign direct investment into the non-oil producing countries might not just do the infrastructure layer, but might also do these other layers, which might mean that in those places there could actually be a maker society, which might not happen as much in the Gulf. But then if a maker society happens in parts of Pakistan, parts of North Africa, or even the rest of Africa, they could be the making of, and without making, I'm not sure you can get to the jobs. Now we can debate what they make, but I think without making, you might not get to the jobs across the variety of the region. I think and so to me, there will have to be a narrative that says, and I think, Ahmed, you were starting, can we dream to get there? And then I think when you have a dream, the big point is how fast can you get to a few steps?
Right.
And that will have to involve some governments because they will have to create some framework. But at the same time, companies represented in this room can be part of a journey that actually makes that possible. But I think it is, in a way, the beginning of the EU was no war. That was a very simple narrative. And later it was, we'll be more competitive. And then, that derives a lot of things. Here, I think we need just a narrative. From the dream back, what's the next step of the narrative?
Right. Do you think that the nucleus here has to be the GCC? It is the most homogenous of the areas within this bigger region, isn't it? So are we looking at something like the way that the EU was founded, France and Germany getting together? The GCC gets together in some sort of customs union, maybe some kind of economic union. Is that how it has to be? Haitam, what do you think?
Well, actually, the GCC does have a customs union already, so that is existing. But I think if we look and draw parallels to the EU has the economic engine, for example, of Germany. And basically with economic engine of Germany, together with, at some point before Brexit, the UK and France, that was driving the rest of the EU together. So I think the same thing exists here because we have a very, very strong engine with the UAE and the Kingdom of Saudi Arabia being big investors, big countries that are economically large compared to all others in the region. And as the locomotive for the region, if these two countries continue to invest and continue having the thought leadership, I think there is a very good chance of success of pulling the rest of the region behind it and creating better affluence in the rest of the region as well.
It would be interesting to... Sorry, go on.
I think there is an incentive that maybe the core that is quite rich will not fully appreciate. But if you take the narrative of Davos today on the deglobalization and regionalization, you mentioned we can't count on China because it will decline. So on what are you going to count? And what I expect is that strong core will need to make deals in a way with other regions so that they are secure of their supply. Africa has materials that the Gulf doesn't have. Pakistan has workers that the Gulf doesn't have, and we can go on with that. And so in that there will be...
and that's part of the freedom of labour.
And that's part of freedom, but in that there will be deals that are totally natural, and they're not like the centers paying for the rest. Of course that happens, but that's what Germany and France... I just want to reinforce that there is a real similarity in the region.
Okay, okay. There was a question here from Mustafa Rawi.
Thank you, Frank, and thank you to the panel. A question for one of the possible solutions. If we need better flow of talent and we need better flow of information, and say Majid Al Futtaim and Etisalat are good, respectively good examples of each, more cross-border consolidation, creating more regional conglomerates, could that be a quick route to resolving this issue?
Majid, what do you think?
So, taking both points, and first of all, I apologize. After this, I'm going to have to leave early, but it's a fantastic initiative. Taking both points, I think what exists in the Gulf is a good starting point, but clearly the benefits of trade or investment are where you have differences in competitive advantage. And actually, the Gulf economies, by and large, are quite similar. So the benefits will be when that integration happens with the wider MENA region, the big population centers that actually have larger markets in terms of consumers, and perhaps advantages in other areas, whether that's in agriculture or in silica in Jordan, for example, or otherwise. As far as this, I think you mean M&A, cross-border M&A. I think there's been some of that. I mean, telecom sector and others, and certainly the regulations to make that easier would be helpful. And often, of course, politics has gotten in the way over the last 10 years. Although I should end on a positive note and say we do have, first of all, this big liquidity. Actually, unemployment is quite low, apart from in the youth sector, and we need to improve female empowerment. That's absolutely the case. We have relative stability by Middle East standards. I mean, conflicts are low and simmering, and generally peace has broken out across the board. First time in my life, the big war is not in the Middle East, it's in Europe. I mean, all wars are terrible, of course, but our region is relatively stable. And we've come out of COVID well, actually. Just looking at what China is going through now, we're past this. So I think it is a positive and optimistic time for our region, notwithstanding the global currents of inflation and high interest rates that are a risk to some of the more fragile economies.
Okay. Majid, thanks. I know you do have to go. Thank you very much. We are approaching the end anyway. I would like to just wrap up by asking the two principals here, really, Majid Al Futtaim and McKinsey, what the next step is. Is there a call to action here? Is there something you can ask governments to do that would accelerate this integration process? Ahmed.
So I share Majid's optimism. I hope, and I think that by this time next year, the barometer would have gone up. And I think it would be a good signal of optimism about how small changes can really take us on this 20-year journey. I think the call of action is for all industry captains in the region, in their respective industries, to actually look at the barometer and look at areas where they believe they can play an active role within their industry groups or with government to really advance economic integration, both from a stakeholder capitalism perspective as well as from a pure shareholder capitalism perspective. So that would be my call of action, and I would welcome anyone who has feedback on the barometer. We'll make the barometer more interactive, more accessible, and hopefully that in itself will also push transparency around really some of the true economic indicators in the region as well.
Right. From McKinsey's point of view?
So we can make it a tradition that a session like this happens and that we at some point migrate from this room to the other one, Ahmed, that's for sure. But I think the other thing is, you mentioned it, Europe started small. It actually there was a precursor to Germany and France, which was the Benelux. And they did a few things. So, when could Pakistan do something with a few Gulf states? That shows a sign. I think this region reacts very strongly to examples. So if this region by next year had 5 examples of stuff that doesn't happen now, on top of the gradual increase that will happen, as Ahmed was saying, I just think that would be fantastic. And then maybe next time we talk about the barometer, we're not just saying the level went up, but here's some stuff that we should celebrate. And that celebration will, again, sort of, what gets measured gets done in a region that's proud, start to say, well, wait a minute, why do we not do more of that?
Okay.
And that will be a gradual process, but it accelerates over time as it gains momentum. Let's make that the hope.
Hazem, is there something that you would like governments to do to help accelerate this process?
Yeah, I think the engagement, and I think, as Ahmed said in the beginning, it's a really concerted effort of both the government, the big conglomerates like MAF, like EANS, as well as even other smaller private sector companies that work across the region, because the opportunity, and I've talked to a number of small companies that are in manufacturing in Egypt or in Pakistan, the primary and easier markets for them to go is to other markets in the region. So if we all have that concerted efforts, it's going to mean a lot of more efficiency and a lot more improvement in the overall barometer. So I'm hoping that, you know, as we look at the barometer, we see the improvement in the numbers every year as we come to this meeting.
Right, well, we can certainly meet every year and talk about this for sure. But is there any low-hanging fruit? Is there something that you can do immediately and quickly to lift the barometer up? Ahmed?
Other than a flight to Sharm el-Sheikh?
Yeah, absolutely.
I think that there are plenty of low-hanging fruits, and I think just to build on the optimism, it's still early in the year, but we already had a landmark acquisition of a Middle Eastern startup. It's a Tunisian startup, InstaDeep, and it's a startup that doesn't clone a business model from Europe or the US and, you know, tries to replicate it in the Middle East. It's a deep AI technology company out of Tunisia, 7 years old, acquired by BioNTech to actually work on advancements in the next generation of vaccines and therapeutics. So I want to end on that note, and I have nothing to do with InstaDeep, but I just want to make sure that everyone...
By BioNTech of Germany?
Yes, for 600 million.
Right.
600 million. Just to go to show that there is talent, there is opportunity. And actually, when I read the headlines, because I'm a bit familiar with the company, the headline said, Germany's BioNTech acquires London-based InstaDeep.
London-based?
It is London-based,
right?
Which in itself a bit bittersweet, but it is a Tunisian, it is an Arab company, it should find a home, and certainly it will have a broad impact, not just on MENAP, it will have a broad impact on the world. So there is always hope.
Let me just ask a bit about financials, because, you know, stock markets in Europe and in North America, a greater proportion of their GDP is floated on stock markets, is you know, quoted publicly, whereas according to your barometer, that is far less so in the region. What can the financial industry do to extend further integration? Sven, you want to?
I think what the West has, Europe, US, is a very liquid capital market and a very liquid, actually, company ownership market. And that has benefits. You know, how many companies will over time be listed in this region? Because the capital allocation accelerates, the growth can accelerate because there's just more capital available. I understand there's a lot of private capital in this region, but the markers are also clearer because the public markets actually show the trajectories of companies, and with that there's clearer comparison, there's reference cases, and all of that actually had an acceleration capacity. Right. It also liquefied the talent markets, because people say, hey, that's a company I want to join. It is the winner in the list. It's the number 2 in the list. I'm going to help make it. And so I think this entire financial system puts an additional lens on the system that just will add to what gets measured, gets done.
Right.
And just to build on that, I think it's very important in this case. It's not really about consolidation of capital markets. Because you can always wait for, ultimately, to have one stock exchange for the entire region. That day may never come. But we've seen a landmark listing in the region with dual listing in Abu Dhabi and Riyadh for a regional champion in food. And that's precisely...
Americana,
absolutely. I mean, $7 billion IPO. We should see more of that. And it's actually a good example of the private sector finding creative solutions, okay, to, you know, fulfill shareholder requirements, create jobs, and also deepen the equity capital markets in the region.
Right. But aren't financial capitals becoming more competitive rather than more integrated? We see Saudi Arabia, you know, offering incentives and in some cases ordering companies to come to Saudi Arabia.
Sorry, an integrated market doesn't mean no competition. It actually means more competition.
Okay, explain.
It actually means more competition. The intent of Europe was not to sort of, of course there's conglomerate consolidation, but the reality is because of the freedom of goods, of services, of capital, Germany became contestable for French companies and the other way around. Before the border, all the borders were there. Now, whether they are listed in 20 different places, you can still, as a reporter, just rank them up, and you can create an index that doesn't exist. Maybe that what you do in the barometer next year, and say here's the MENAP barometer, here's the MENAP stock ranking of what's available, and where they listed doesn't matter. So to me, that competition is actually, for now, I think a bit of competition is good to move people forward.
And competition for FDI is good as well, because different countries within the region are trying to attract FDI, aren't they?
I personally think that's also good, because it means that the companies will have to stretch more to do the right thing. They will be judged by those capital markets for doing the best projects, which means the return on capital in the region goes up, which means the engine moves.
Right. Dubai seems to be the FDI capital of the region, doesn't it? Will others, try and overtake them? Will they be able to do that? What do you think, Hassan?
Look, I think that cross-border M&A is something that is going to always be a matter of, let's say, supply and demand and good deals. So I think companies from the region going across border and acquiring companies in other regions is a big possibility. And we also have seen a lot of international companies coming and investing in the region as well. So I think this is going to be always there. But I think what, again, the barometer is encouraging us to do, that companies within the region focus first and foremost in investment within the region because of this integration and creating that kind of economic sustainability. And again, I was in a discussion yesterday when there was, in this, again, part of this deglobalization. Actually, Sven was part of that discussion, that today, in the age of deglobalization, the only country in the world that can be self-sufficient and be on its own is the United States. They have their energy supply, they have the food supplies, they have the technology supplies, they make their cars, they make their chips, they make their computers. They're self-sufficient. If you look elsewhere in the world, nowhere else is self-sufficient. And I think a lot of economists have been saying this now recently. So we have in this region the capability, as we have in some countries in North Africa, like Algeria and Morocco. These are countries that are very agricultural, have a lot of food supplies, and they export food. We have countries in the GCC that have a lot of energy supply. We have countries like Egypt and Pakistan that has a lot of labor. If we can create that flow, it can create a lot of wealth in the region.
Okay. Any final question from the audience? Yeah, there's one over here, please, and then we'll wrap up very soon after that.
Sven, one question on this current headwinds of friendshoring and the Inflation Reduction Act in the US. How do you think it will impact as an aggregate the MENAP region?
So how will US economic policy impact on this MENAP region that we're discussing?
So I'm trying to think.
I'm asking about the friendshoring of moving from China.
Oh, I see. Sorry,
Inflation Reduction Act.
I'll just say one thing on the friendshoring. We had a session on, we had a report on what's called global flows. And before we think we can friendshore everything, we just need to do the numbers. The number of people doing the work for Europe and the US, outside Europe and the US, is 110 million people. Let's think they come in twos or threes when they would have to do the work in Europe and US. It's just physically impossible. Okay, so the reality is we're much more discussing a diversification of a very concentrated globalization, where about 2/3 of the concentrated globalization, where we basically have very single sourcing relationships, is just by own choice. Where you just say, oh, it doesn't matter that we're dependent. Well, it does matter. That's what we're learning. So I see a diversification happening, which might actually mean that stuff that we get from China or that we get from Australia or something might actually have to come from Pakistan, might have to come from this region. So I could think that diversification should, at least for parts of the region, be a lift rather than a... so that's on the globalization. The IRA is going to accelerate the alternative energy stuff, but is that accelerate? You guys here in the region are also expecting. Will it diminish the revenues in oil? I don't think so. So I'm not sure how the IRA would actually. The IRA is really competitive in Europe. I don't yet see the direct connection, but maybe I missed something. How the IRA would truly handicap this region now, but maybe I'm missing something.
Okay. We are going to wrap up, and because the name of Majid Al Futtaim is on this barometer, I want to give Ahmed Ismail the final word here. What should we take away from this session today, Ahmed?
I think my takeaway is the opportunity is immense. It's evident. We have many ingredients. We cannot wait on government. And we can take one step at a time. And I'm confident, I may not be here in 20 years, but in 20 years we'll be on the main stage, perhaps talking about MENAP being, a success lighthouse story of economic integration and prosperity for all.
Okay, wonderful. Look forward to that. Ahmed, Sven, Hatem, and of course Majid Jaffa, who had to leave. Thank you all very much indeed. I think a round of applause is called for. Thank you indeed. Thanks a lot. Great.